Hey, everybody. Happy Friday. Welcome to another Free Real Estate Advice Friday. This is episode 39. Um, Today, I want to talk about real estate investment properties and getting started with that. This is going to be really broad, general overview. And the reason I decided to do this was because I'm getting a lot of questions about this lately. Um, and what's interesting, and I've particularly gotten this question a lot from first-time home buyers, and let me tell you why I think that's a great thing. Um, One of the strategies that we're going to talk about a little bit is home hack. A home hack is basically living in part of a home and renting out the other. So, in a simple example, you have a uh, 2-unit house, side by side house. You live in one side, you rent out the other. Generally speaking, when you do something like that, you're probably going to pay more than half of your mortgage with that other side being rented out. It's a really great way to start building equity right away using someone else's money instead of your own. And it's just gotten super popular. What I think is interesting about the whole real estate investment world is that, and I just had this conversation with someone yesterday, I think the younger generations, and I'm going to say younger as age 30 and below, are a little more hip to this than previous generations. Now, that's not to say that there haven't been great real estate investors in previous generations, because certainly there have. But I think that this younger generation is much more hip to this than previous generations on a larger scale. And there are specific reasons for that. Everything from social media. I mean, there's a lot of influencers that are very heavy in this world. There is just a wealth of information out there. Again, it often starts with social media. It could be TikTok or Instagram or something of, just people that are investing in real estate at a high level at a young age, and people seeing that and then continuing on to other sources. And we're going to talk about some of the good sources if you are kind of looking to learn more about this. But I will tell you that I think that I'm 42 years old, and a lot of people in my generation, and we're still relatively young for real estate, believe it or not, and young 40s. A lot of times with larger level investors, they do tend to be people that have more resources and are, generally an older demographic. Because they've had properties, they've had time to accumulate resources. Maybe they've had properties that they were able to move out of, but hold on to, and so on and so forth. So, generally speaking, your big investors that I deal with are generally an older demographic. But I am seeing more and more of the younger demographic really trying to dip their toe in. And if that is you, a house hack is by far the best way and easiest way to just dip a toe in, have one unit that you rent and get used to how that works and what it looks like on a day-to-day basis. And then from there, sky's the limit. Getting that first one's the hardest part. Second one's a little bit easier. And then once you get that second one, it's wide open, because you have, you probably or hopefully are producing income from your rental properties. You have more assets, you have more resources, and now you can really start to accumulate doors. So, we're going to talk about a few things. I'm going to talk about a few resources that are really good to hang on to. Also, we are broadcasting now to another place. So now also broadcasting to LinkedIn. So I do see quite a few people. Again, as I always remind everyone, I can't see A, who's watching, and B, where they're watching from, because we do broadcast to now 6 places simultaneously. So if you do have any questions or you would like to ask me anything, it could be completely general, can be off topic from what I'm talking about. Doesn't even have to be real estate related. Please post a comment wherever you're watching, whether that's YouTube, LinkedIn, Facebook, one of the Facebook groups, whatever it may be. And go ahead and, throw me some questions, because I always love to answer questions in real time. It's a lot more fun than me rambling on about investments or whatever I'm talking about in a given day. So let's start with the activity we've been doing every week. And I always mean to do it before I start this, but I didn't do that. So I'm going to look. And I want to take a look at that 30-year mortgage rate, because that's pretty much the number that everyone's looking at. I'm rearranging my screen here. It seems to be the thing that is linked most to buyer activity these days. So let's take a look at the current rates. Obviously, this is subject to your credit worthiness and whatnot. This is just like an average rate. And I think they have been trending down recently. Yeah, down a little bit from when we did this last week. Let's see. Well, it depends. Again, I'm getting varying answers. Yeah, it's fluctuating between over the past week 5.7, 5.8. I'm seeing one source telling me Google is that source is posting a 6.5 rate. That doesn't seem right to me. That's not in line with what I've seen this week. But let's just call it. Rates are continuing to hover around that 6% mark, maybe a dip below a little bit. There is some thought that they'll kind of go down a little bit. And listen, if you're buying at 6%, there's a good chance to just expect that you're going to refinance one of these days. Most people with a 30-year mortgage at some point are going to take the opportunity to refinance. And I always say, like, maybe the people that locked in at 2.8% over the past 2 years, like they probably won't refinance because that's a great rate. But other than that, most people holding a 30-year mortgage and paying it off gradually are going to refinance at some point. So I wouldn't let that 6% really stop you. Also, that is still considered historically low. And I say historically low. I don't mean that's the lowest in history. Obviously, it wasn't lower than that a year or two ago, but the historical average is roughly 8%. So we are actually still considered to be in a historically, below average mortgage rate. It's just that the recent history, it's a little hard to swallow when people were paying 2.8, 3.2, a year and a half ago, and now we're up to around 6. But listen, if you're looking for a home and it's the place you're going to live for the next 10, 20 years, then that shouldn't be a primary concern. I also read an article. I'm going to share this on my page, but this is from NBC News. This is the best time in years to buy a house. And the reason they're saying that is what I've been saying for the past few weeks, is that because the interest rates are rising, we're losing buyers. Those were kind of your opportunistic buyers that saw the rates being super low and said, well, we were thinking about making a move, so let's go ahead and do it. The rates are super low. Let's get this locked in and be done with it. And that's how we got into this crazy market with the bidding wars and everything else. And now I think we're down to like the necessity buyers. There's always going to be some level of people needing to buy or sell a home. And I think that we've whittled it down, gotten rid of the, opportunists and speculators and stuff like that. And now we're down to the people that just need to buy home. So what we're seeing at the local level, and I think this is probably true of most places nationally, is the bidding wars are slowing down quite a bit. In fact, I will even say that, relative to the last 2 years, even when there are bidding situations, I just got one for my clients. I believe that we ended up with 8 offers we were up against. And we were a little over asking price, nothing crazy. We didn't waive anything, and we were able to win the bid with a home sale contingency. So that's significant. So we went a little over asking. We picked a price based on the fact that we were coming in with a home sale contingency, but it wasn't anything crazy over asking price. And we did our research and we thought our price was fair regardless. But we wanted to add a little premium, acknowledging that we had a home sale contingency. And I'll say that the home was under contract and through inspections and everything, so it was a light contingency. But that is significant because a few years ago, and this was a house that was under 500,000, which over the past few years has been a super competitive price point. I think it is significant that we were able to get this just over asking price with a home sale contingency in a multi-bid situation, and we came out on top. That is definitely indicative of a new market. That's not something that we've seen a lot of in the prior, couple years. I'd say even before the pandemic, the market was already crazy when the pandemic hit, and the pandemic didn't slow it down. It just blew through that and continued to increase. But there's a couple things in this article that I thought were pretty interesting, and let me just go ahead and share my screen really quick. Okay. How's that look? All right, good. All right, so this is a little small. but I'll just let you kind of follow along with me. If you're watching this on a phone, it's probably impossibly small, but if you're watching on a computer, you can probably see it a little bit. So from NBC News, this is the best time in years to buy a house. Just a couple key points I wanted to point out on this article. So I just mentioned something that we're gonna move on to talk about investment properties. And I think over the past few years, one of the most challenging aspects of this market has really been for first-time home buyers, because with all the bidding that was going on, first-time buyers typically have the least resources, just because they tend to be either younger or hadn't previously been in a position to accumulate resources. Second-time buyers generally have a house that they're going to liquidate, or if they don't need to, then that's fantastic. But that means they have resources, and they don't need to liquidate their house. Then they have resources, obviously. And I think with this crazy market, the first-time home buyers are the ones that are really kind of getting bullied out, because you can't ask to put a 3.5% FHA loan down in a competitive situation. It's just not a favorable offer. That doesn't mean that we can't get you something. It just means it's probably going to be a bit of a battle, and we're going to have to be very strategic, and you're probably going to have to swing and miss a few times. And that's what's kind of taking a step backwards. Slowest month in more than 6 years was last month. Lease transactions in 6 years. Existing home sales in July fell for the 6th consecutive month to their second lowest point since the start of the pandemic. These stats are all according to National Association of Realtors. Excuse me. And while the median sales price for an existing home climbed 10.8% from 1 year ago, it was down $10,000 from the previous month's record high of $413,800. So again, it would seem to indicate that last month we were hitting peak pricing. It's interesting because obviously this is at the national level and every market is different. So let me give it the local context. I think what a lot of us were seeing in the Hunterdon County market, and I would say even in Union County and Somerset County, it was actually the higher price points that were still fetching well over asking price. Whereas I think cut to a year or two ago on the local market, the more competitive price points were the lower price points. And I would say 500 and below, super competitive. I don't know how to explain the shift, because it's actually quite an odd one and extremely frustrating for us agents, because it kind of came out of nowhere. But we went through this blizzard of transactions, especially here in Hunterdon County, where the higher price points were just fetching so much money. And I can tell you from my experience, I had several offers that I put in on homes that were above, we'll say above 750, some of them over $1 million. And we put in offers 100,000 over asking price, and they did not get accepted. They were actually in most of those situations, the offers that were accepted were cash. And that's a whole separate conversation, because I don't know if they were truly cash or there are programs to make you appear to be a cash buyer. And for the seller's purposes, you are essentially a cash buyer, but there is a way that the seller gets in that situation. And then of course there are people that just have $1 million in cash and can buy a house. It's pretty hard to compete with that though. If you don't, if you're up against a $1.1 million, let's say the listing is $949 and the offer is $1.1 million, so $150,000 over asking and cash and waiving inspections, that's a home run. I mean, that offer is almost impossible to beat. And we were seeing those kind of offers as recently as a few months ago. That has definitely taken a dip back. We are seeing longer days on market. We are seeing less bidding. We are seeing less going well over asking price. So again, local level, this is a national article talking about national trends. So I just mentioned that we're down $10,000 from last month's average sale price. First decrease since December 2021. So in other words, the average sale price of a house in the US has just steadily gone up all the way up until this past month, and now has started to come down. Price cuts were particularly substantial in pandemic home buying boom towns like Boise, Idaho, Salt Lake City, and Sacramento, California. Always keep in mind when I'm talking about these national trends, there are markets that are skewing these numbers slightly. There's heavy activity areas where the numbers might skew. Here in Hunterdon County, we are always kind of a little bit outside of the national trend because we are a fairly rural, relatively speaking, and a middle class type of county. Demographic is a little bit different here. This is not a secondary home market, meaning there's not a lot of vacation homes. So we tend to, be a little outside of trends, but, pretty close, generally speaking. Home sales may soon stabilize since mortgage rates have fallen to near 5%. I mean, this article was written earlier this week, and I'm not seeing that. I mean, near 5%, I think, is a very generous assessment of what the rates have been recently. But again, mortgage rates are always subject to many factors, including, the national average. Rising mortgage rates have put an end to the end of frenzied bidding wars, which is what I just said, though at the cost of excluding some buyers from the market. The good news for buyers right now is there's a lot less competition than there was 6 months ago. So if you find a home you like that you can afford, you don't have to worry about competing with 50 other offers to get it. Now, a little bit of a hyperbolic statement, especially as it pertains to Hunterdon County, because I don't think, as far as I know, there's not been a property in Hunterdon County that took 50 offers. Now, if you go to populated areas, I know there's particularly one case, there was an investment property up in Montclair. It was up right across from the train station. And I know they took like 65 offers. That is obviously, first of all, you're getting investors. Investors can be very aggressive. They know what they want. When they see something, they want it. And that took a ton of offers. It's in Montclair. It's across from the train station. It was a multifamily unit. A lot of things that led to that. But I think it's fair to say 20 offers for Hunterdon. So again, if you're a buyer right now, you're not going to get into a 20 offer situation. The last one I did, like I said, I think we ended up with 8 offers we were up against. So it's just kind of quieting down slowly but surely. And, I would say this is if you're using a realtor to buy a home, one of the things that you have to be very conscious of is what is that realtor strategy in terms of buying. And I've talked about this often. There's videos on my YouTube channel about, just make sure that your agent has something that they do. I'm not here to tell you that my strategy is better than anyone else's strategy. Obviously, I would say that, and that would be extremely biased of me to command that I have the best buying strategy. But over the course of my career, it's been successful, and I'm confident in it. But the most important thing is that I can dictate it to anyone who asks, and we do this during buyer consultations. The first time I meet someone, they tell me they're interested in a house. I say, hey, let's jump on a Zoom call or let's meet for coffee, and I'll give you a free buyer's consultation. We talk about what they're looking for and whatnot. But part of that conversation is, here is my strategy. And that's important. If you're talking to an agent that can't answer that question clearly, well, what is your unique sales strategy? What is your unique strategy for getting an offer accepted? Then, in this market, I would, again, a little bit biased here, but I would tell you to run for the hills. What I will tell you is, as the market slows down, the agents who are very deliberate and strategic, and there's a lot of great agents out there. I'm sitting in a building full of, great agents. Of the top 20 agents here, we have 160. The top 20 agents here in the office, I could pick out that most of them are excellent at their job. So there are plenty of good realtors out there. But there are a ton of part-time realtors, and there are just a ton of, not great realtors, and or less educated or out of practice or whatever the case may be. And, if you click on those Zillow links that say, hey, I want to tour this property, you're just going to get some random realtor. And, it's a total crapshoot if that realtor is any good. There's really no way of telling other than reading, Zillow and Google reviews. But that conversation is something that you should definitely be able to have very easily, is what is your strategy for getting an offer accepted? So make sure you can at least get that out of your realtor. As the market slows down, I think that's becomes even more important, because you can have a great strategy, but in a sea of 20 to 25 offers, you can only do so much. When there's 3 or 4 or 5 offers and you have a very deliberate strategy, it's magnified. Out of the 5, you're going to stand out more than out of the 20, obviously. So, in situations like I said, where you're up against 150,000 over asking with cash only and waiving everything, there's not a lot of strategies I can enact that are going to overcome that situation. But when you're up against 4 or 5, like middling kind of offers, then you have a much better chance of getting that offer accepted if you have an agent that's very deliberate. So let's cut over to investment properties, and I want to just talk about some of the resources that we use. So I'm going to get off this NBC News article. And this article's, it's nothing crazy. There's versions of this article coming out all the time talking about the market. It's a very generalized, and with a couple quotes and a couple National Association of Realtors stats. But I think the general consensus is, first of all, it's very slow right now. The number of transactions is completely down, down more than they've been anytime recently. But the general consensus is it's sliding back towards buyers. We're not there yet. It is still a seller's market. If you have something to sell now, it's going to sell. You are going to get very good money for it. That may go away at some point, but as of now, it's still a seller's market. We'll see what the coming months bring. The biggest reason for that is not necessarily all the buyer activity that we just talked to. It's just that inventory is so dreadfully low that the sellers have all the power, because there's only so many houses to go around. So until that changes, it's going to continue to be a seller's market. The good news is it's lightened up a little bit on buyers. So I don't see that drastically changing in the coming months. But you never know. But that's the current situation. I don't know, to get a sudden influx in inventory, it seems like, that's probably just not going to happen. So, that's that. So let's talk a little bit about investment. So I started by talking about, good ways for young investors to get involved in the investment game. So, my favorite, way to do this by far is the house hack. And again, everything I'm going to say in the next couple minutes is going to be extremely general. If you have deeper questions, you have a couple options. Number one is, of course, just give me a call and I'll be happy to talk to you about anything you want. Number two is, we actually have a really good investor mastermind group here at Keller Williams. And Keller Williams Clinton, where I'm sitting. This is a group that is run by our ownership group, and we have several offices across New Jersey and Pennsylvania. Don't quote me, but I think we're up to 14 offices or somewhere in that range. And all of the people that are in those offices can get on these Zoom calls, and it's an investor mastermind call led by one of my colleagues who has many, many, many doors. And every week we pick a subject. The last one we talked about, I think we went over just some general stuff. We've talked about Airbnb. We've talked about house hacks. We've talked about the BRRRR method, if you know what that is, and I'll talk about that in a second. Buying multifamily units, buying out of state, buying different types of domiciles. There are all sorts of things that may not be available here in New Jersey, but are available in California or Florida, or the Midwest or whatever. Those are all covered. So there's generally a subject each week or each month. It's once a month. It's a 1-hour call. Anyone is invited. You do not have to be a realtor. We invite people all the time. Very few people actually show up, but if you do have interest in it, please just contact me and I'll put you on the mailing list to make sure that you get the invites. But it is available to anyone. It is a really great call. We have some very, very high producing investors on the call every week. And it's very laid back. You can ask any question you want. It's super easy. So just shoot me a message if that's something you think you might be interested in. By far, I think one of the biggest resources to start looking at investment options is the BiggerPockets website. Now, this has been around for quite some time. It is extremely popular. And I think this is where that younger generation is coming around because of the information provided here on Bigger Pockets. So you can just go to Bigger Pockets. You can sign up for a free account, super easy. If you want to do a paid account, you get a little more insight as to calculators that are available to you to analyze deals and other resources. And I won't do marketing. I have no connection to Bigger Pockets, but you can get all the details here. Let's see. Yeah, so here you go. There is a membership page, and it explains to you all the different options that are available to you, ranging from free, which is what I have currently, to the pro monthly and pro annual. And this is the place. So what's really popular on the Bigger Pockets website is two things. Number one are the books that have come out of this community. I think the most popular one for a long time was the BRRRR method. And I'm just going to show you that real quick. So there is a BRRRR calculator here that tells you how to crunch those numbers. And there is a book that goes along with it. And let's see if I can get a quick shot of the book. Here it is. So in the Bigger Pockets bookstore, here's your BRRRR method. Great read. Explains it at a high level. I think most of these are available as audiobooks. I will say that these books, especially if you're starting here, tend to be a little dense. In fact, really anything revolving around investing in real estate can be pretty dense. And there's really two methods to that. Number one is just have a very brief overview conversation. Call me if you want. That I'm totally happy to just completely get you started from square one and point you in the direction if you want to dig deeper. But a lot of times, if you read the BRRRR method book, there are probably going to be, in any given person that reads the book, I think there's going to be a lot of aspects that are confusing. It could be just simply you understand everything but the financing end, or you understand everything but the refinance end. You have questions about being a landlord. That is a very good question because there's a lot to unpack there. You have questions on how to buy, how to find good deals. Any one of those aspects could be complicated to you, and maybe you totally understand the rest, or half and half, or anything like that. So, in addition to reading the books, it's good to get on the second aspect of this website, which is super popular, and that is the forums. So if you're familiar with Reddit, or to some aspect Facebook groups, or any of the exclusive forums that are out there that have their own website, the Bigger Pocket forums are such a wealth of information. Let's see if I can bring those up. This is the store. Let me get out of here. Here we go, forums. So again, doesn't cost you anything to be a part of these. These are the forums here. There are a ton of conversations going on as it pertains to local markets, as it opposed to certain subjects that you want to discuss. You see all the subjects here on the left. Starting out is its own forum. You can dive right in and just start reading as much as you want. It's literally endless short-term and vacation rental discussions, general landlording and rental properties, marketing news and data, general real estate, homeowners association, first-time home buyers, goals, business plans and entities, general real estate investing, real estate strategies, and it goes on and on and on. I mean, it's literally endless. So this is a goldmine of information. You can dig into this and take it in any direction that you want. This is generally where I'm going to point people. I will talk to you for hours on end if you would like me to, and we will end that conversation with me saying, now go to Bigger Pockets and just start digging in, and find the conversations that make sense to you, and find the conversations of like, yes, that is what I would like to do. Whatever you're trying to do. So if you're younger and you're just trying to get started out, and I'm calling younger anything under 40, because in terms of buying real estate, that's relatively young. If you're younger and you want to get started, I highly recommend the House Hack. Let me see if they actually have. Yeah, House Hacking is an entire forum on here. So I'm just clicking on the House Hacking, and this is all related to house hacking. House hacking, in my opinion, is by far the best opening strategy for someone who's looking to dip their toe in, because you only need that. Again, in the example of a 2-unit house, you live in half and you rent out the other half. The rent from that one half is going to pay a good portion of the mortgage on the entire home. You live at a reduced rate. Your tenant is helping you build equity. They're paying rent to you, and you're turning around and paying off your mortgage, and you're building equity. And now you have an asset. And eventually, when you decide to move out of that house and upsize to, a single family for, your family, or you want to move to a different area, or you want to start a new project or a new house hack or whatever the case may be, now you can rent out both sides. And now you have an income producing property. So house hacking is like a really great way to get started. As it relates to Hunterdon County, I think it's a little bit more difficult to find these opportunities because they just get snatched up. And that comes to like another whole subject of real estate investing. I am very much of the thought that in order to be a successful real estate investor, you have to do your business in places that you enjoy being. So that could mean that you want to get a Airbnb in the Poconos. That could mean that you want to get an Airbnb at the beach. It could mean that you just want your investment property to be in Hunterdon County in a place that you like, let's say like Holland Township or Pittstown or Clinton, a place that you don't mind being because you're probably going to be there a fair amount. That's my personal theory. Now, if you're just looking at dollar signs and numbers and you don't care about anything else, listen, there are opportunity areas. There are places like, locally Phillipsburg, or you can go towards Newark, or you can go into PA, the Easton. There are places where you can buy houses where, maybe the neighborhood's a little bit of a different crime makeup. Maybe you don't really care about that. You're going to have different types of tenants and all sorts of demographics and income brackets and everything else. And if you're okay with dealing with all of that, then the numbers generally are going to be more favorable because the opportunity is a more robust opportunity. Whereas if I just pick a multifamily in a beautiful established neighborhood, then obviously I'm not going to have the same numbers of someone who's willing to take more risk and whatnot. So I think that's one of the early decisions. Especially if you're living in it. You don't want to be living somewhere that you don't like being just because you thought that was a good opportunity. Listen, maybe some people are okay with that, but that's definitely something to think about because that could be an easy way to get out of real estate investing before you really got in because you didn't really think about that aspect up front. So by far, I recommend the house hack if you're just trying to get started. You're younger, maybe before you have a family, if you're flexible on like number of bedrooms and stuff like that. It's incredible if you can get this opportunity and it involves a multi-unit. So like 3 or 4 units, because then almost definitely you're paying your mortgage at that point. So house hacking is fantastic. Are people still flipping houses? Yes. I would say that the professional home flipper has come way down. This was red hot years ago, way before I was in real estate. Flipping homes was definitely a thing that we all knew about. That has come way down because the market being the way it is, prices being up a bit, the opportunities are just the opportunity versus the risk in a flipping situation the margins have gotten tighter, so it has become less popular. What has picked up the slack is the BRRRR method. So that is buy, rehab, rent, refinance. Sometimes you'll see it listed with another R, like the book I just showed you, which is repeat. So buy, rehab, rent, refinance. It's a very specific strategy where you're buying a home that needs some work. So let's say you get a multifamily, two sides for $180,000 in Somerset. You rehab the entire place. You then rent it out. And then once you've done all that, usually with a renovation loan or a hard money lender that's giving you a renovation budget, you refinance the home at its new value now that it's completely redone. And you repeat the process. You hopefully pull some cash out of using your refinance. You pull some cash out. You have renters in place that are going to cover your nut, and then you repeat the process. You go out and find a new opportunity. So that is the BRRRR method. I would say that's probably the most popular method for real estate investment. Um, and then beyond that, short-term rentals are definitely becoming a thing. Well, I shouldn't say that. They've been a thing, but they're definitely becoming a more attractive thing to, you know, intermediate investors. Um, Short-term rentals are a different animal because obviously if you get a tenant and you've got a good tenant and the tenant's paying, that's the dream scenario. And you hope to have that, 85, 90% of the time that you own the home. You hope to have a good tenant that just pays their rent. You don't hear from them much. Obviously, there's maintenance on the house and stuff, but they're not late on their rent and all that stuff. Fantastic. Short-term rentals, obviously there's much turnover. So if you're doing like an Airbnb in the Poconos, it's people staying for anywhere from 1 night to 7 nights, and there's constant turnover. So where I'm sitting, I'm probably an hour from the Poconos. I don't want to be driving there between every person that comes and goes. So obviously you need to put people in place. You need to have certain security features like keyed entry, push button entry. You need to have cleaners in place. You need to have all sorts of things so that you can continue to turn them over. So a little bit more in terms of getting systems in place, but those systems are available because obviously this is super popular. And in fact, if you want to learn about those systems, go right on this, Bigger Pockets website and look at what people are doing. There's apps, there's all kinds of things to automate as much of it as possible. But again, endless. You could be on here for hours and just get endless information. Great way to just kind of backfill all of the things that you don't have experience in. Instead of having to wait to get your own experience, you can pull off of other people's experience. And these forums are fantastic. They're very well known. People try to be helpful. Generally speaking, they are moderated. So if someone is just being, a troublemaker, they get them out. It's a really, really gold mine of information in terms of real estate investment. What are the challenges locally here in Hunterdon County on investing? The biggest challenge in Hunterdon County is the pricing is relatively unforgiving. There are areas of opportunity, again, if you nearby, not in Hunterdon County, but in Morgan County, is the Phillipsburg, Alpha area, tend to be a little bit lower prices. A lot of just because of the age of turnovers, particularly in areas in Phillipsburg, that it's just the time where those houses are turning over, generally speaking, like, every 30 years or so, there's a mass turnover in a neighborhood. And there's a lot of areas in Phillipsburg where that's happening. The homes need a lot of rehab, but you can get them fairly cheap. Generally speaking, single family homes, but, good opportunities for sure. I've seen a few of my clients have picked up homes that, and don't get me wrong, they're actually nice homes and tons of potential. They have a lot of character, old features. Kind of reminds me of Somerville, similar situation with like a lot of just craftsmanship and Victorian style homes with, carved wood and stained glass windows and stuff like that, where there's a ton of character in these homes. They just, a lot of times have just been neglected, and they need to be modernized in terms of your systems and HVAC and all that stuff. But there are definitely good opportunities. But if you're trying to stay right in Hunterdon County, like in the heart of, Pittstown, Union Township, Clinton, things like that, the opportunities are lighter. There are fewer of them, and you're going to have to search for a while. If that's something that you're set on doing, I think that you're going to have to be patient, and then you're going to have to be aggressive. So one just came on in Clinton Township. It's a duplex, had two sides. One side needs heavy rehab. I didn't actually see the other side because it was occupied. But I'm assuming if it was occupied, it was a relative term. It was in relatively good shape. In other words, I'm just saying inhabitable. I'm not saying it was updated or anything. The other side was pretty much gutted. And the last I talked to the agent, and we didn't make it all the way to the deadline because my client decided to not put an offer in, and I thought he was, staying within his means and made a good decision. But I think they were up to 14 offers when I last talked to him. So when those things do come up in Hunterdon County, they go quick because there are a lot of people in Hunterdon County that would love to have something in their home county as investors, and that doesn't come up very often. So when they do come up in Hunterdon County, they go quick. That's buying off the MLS. That's obviously going to produce a lot of offers. You can also look for private deals. You can look for sale by owners. You can look for, if you live on a street and there's a house in your neighborhood that's just been vacant forever, and you happen to drive by and they're having a yard sale, go talk to them and see if they're interested in selling their house. That's a for sure easy way to get something off market and give them a fair price, but they don't want to deal with putting it on the market. Those off market deals are often very good for flippers. You see these signs up around towns like "We buy houses for cash," those kind of things. That's exactly what it is. They're looking for people that are just like, listen, I get it. My house is wrecked, or maybe it's not even their house. Like maybe they inherited it and they just like don't want to deal with it. They don't want to empty it out. They don't want to do any sort of repairs or deal with the market or showings or realtors or anything. So that's why you see those signs up on. It's kind of an old school marketing method, and I'm sure there's online equivalents. But you'll see in any town, there's always like signs put up on like telephone poles, like "We buy houses for cash." And that's all it is. They're looking for people that just need to sell, and then they take those houses. They pay, somewhat reasonable is a relative term, but they pay something somewhat reasonable for the house. They buy it up, and either they sell it to investors or they fix it up themselves, or whatever the case may be. So that's what those signs are all about. Generally speaking, I think what you can expect is that you're going to get like 70% of market rate. And that doesn't mean market rate of that house fixed up. That means that the house in its current state, which could be wrecked, has a market rate, even though it's wrecked. And the person that says "We buy houses for cash," they're probably going to give you somewhere in the neighborhood of 70% of that figure. Whereas if you put it on the market, you hope to get that market value, and maybe it will trickle down from there. And the difference is it really depends. Do you want the situation where you have 14 offers on that house? Good chance you do, in which case you hire a realtor and they sell it on the MLS and you get every dollar you can. Or you take definitely the easier route and just sell it to this guy that buys houses for cash, but you're going to get less money. So, either route. Obviously, I'm a little biased in which route I think is going to yield you the most money, but that is how those work. A lot of people do still like house flipping for like real quick capital gains. So in other words, they have a project in mind, but they only have, a third of the money they need. They might pick up a quick flip with a very specific plan of what they're going to do with it. And then, now they let's say they double their resources. Now they can maybe go out and start eyeing up that bigger project they have in mind. So flipping's still popular there. Am I seeing people do flips in mass? Not nearly as much. I think it's harder to get the property at the right price to kind of necessitate what you would need to do to flip the house and get a good profit, because there's obviously risk involved. So you have to it's got to look good on paper, because it's probably going to come down from that. You're probably going to find a few surprises as you start fixing it up. Maybe you don't get all the money you thought you were going to get for it. So you have to build that into your equation. And if the margins are already too tight, then forget about it. So that's why flipping is just not quite as popular. But yeah, that's pretty much it. I mean, there are a ton of podcasts out there, audiobooks, stuff like that. But I would tell everyone that this starting out on the Bigger Pockets forums, you really can't go wrong. In the bookstore, I'll show you the books that I have read. So I've definitely read the BRRRR Method, the book on estimating rehab costs, the book on rental property investing. I'm not saying the book on, that's literally the title of the books. These are all, like, obviously you can tell these are really great resources. Let's see what else they have that I've touched on. The Multifamily Millionaire. That is definitely the whole multifamily thing is definitely the most popular investment strategy out there, because when you're dealing with the multifamily, if you have one bad tenant out of 4, you're probably still covering your nut. And then when you get that 4th one in there, then you're starting to make some serious money. But it offers a sort of internal hedging mechanism. Whereas, if you have a vacancy, that it will essentially cover it. That's why multifamilies have become very popular. And then obviously people like Ryan Seahart and the big investors that are now going for like 60 unit buildings and stuff like that. That's definitely a huge strategy these days. Investing in real estate with no money down. It says with no, and then in parentheses, and low money down. That I'm sure that will be of interest to you. It is definitely a sexy title. And there's, as you read it, I'm sure you'll see that there are caveats there, but it definitely can be done. Long distance real estate investing, managing rental properties, tax strategies. If you're an agent, there are a lot of just real estate. This one is Every Real Estate Agent's Guide to Building a Profitable Business. First time home buyer, book on flipping houses, yada, yada, yada. So you can see all these books in here. There's whatever direction you want to take it in. It's all here for sure. So definitely highly recommend this. And before you start, I tend to be like an ambitious book buyer. I buy books before. When you're in the bookstore, you get the endorphin rush of buying and purchasing the book, and then you bring it home and you put it next to your nightstand. And then 8 months later, you're cleaning up your room, and you say, "Oh yeah, I remember when I bought this book. I was definitely going to read it, and I haven't touched it." So I would say, the books are great, but if you want to just dive in and start, processing and information, just go to the forums. It's by far the easiest way to stick a toe in, and it's free. So. All right. So anyone who has questions on this stuff, please feel free to reach out to me. I'm happy to do it. I have a lot of investor clients. In fact, most of the savvy investor clients I have are basically just on standby. They're basically just waiting for me to pick up the phone and say, I found one for you. They're not necessarily like, home buyers that are buying homes to live in. Those people are like looking for a home, and they're sending me links to homes they want to go look at. The investment buyers, a lot of times are like just waiting for a call from me to say, hey, I got something, and that could be an off-market deal or something like that. So it's a totally different market to deal with. But a lot of great people and smart and savvy buyers in that. So again, if this is something that you have interest in and you would like to learn more about, then please feel free to reach out to me. Bare minimum, I'll be happy to talk to you hours on end about whatever questions you have and get you started and point you in the right direction. Secondarily, we do have that investor mastermind call, which anyone is invited to. That is once a month. It's generally on a Friday around lunchtime. We do that specifically so people can hopefully join from work if you are, you have a day job. And then lastly, if you need help, you're like, yeah, no, this is all great, Craig, but I know most of the stuff and you want to just get started, then give me a call and we can make sure that you're on. We have a specific investor list that we maintain, and we send out opportunities to investors that are looking for opportunities. And, we're always looking to forge a long-term relationship, not necessarily, a one and done transaction. So, yeah, that's pretty much it for today. As always, if anyone has any questions in the meantime, please feel free to post in the comments, and I'll be happy to answer your questions in the next few minutes that I'm on here. Local businesses, if you'd like me to plug your business or interview it, please let me know. No money exchange necessary. It's just nothing more than a networking opportunity. We've had a few guests on here to just talk about their business. I'm happy to help out. Any small business does not have to be local necessarily. If it's an online business primarily, please feel free to contact me, and I'll be happy to talk about it. And yeah, other than that, if you need help buying, selling a home, please let me know. Be happy to meet with you and give you a free consultation and talk to you about the process or answer any general real estate questions that you may have. All right. There will be no broadcast next week, which, coming up on number 40. Never thought I would do 40 of these things, and I'm excited to hit number 40, but it won't be next week because I will be on vacation with my family, and I will resume the following week, which I think is going to be fine because I think everyone is on vacation. We've had like no one in the office these days. Everyone's kind of finishing out the summer. So that's about it. I hope everyone's doing well, staying healthy, enjoying what's left of the summer, and I will talk to you all soon. All right. Take care.